Now, throughout my 7-figure dividend growth portfolio, as you can see right here on the screen, every single different dividend stock and ETF in my portfolio all have a few things in common. Every single asset that I hold in this portfolio has the potential to go up in price over time, which of course I'm hoping happens. But on top of that, every single position in my long-term portfolio all pay me dividends, whether it's quarterly or monthly. But of course, not every single stock and or ETF are created equal, and certain assets offer certain things that others don't. Now in this video, we're going to go over 2 newer positions that I've been adding like crazy to my portfolio as of recently, both of these being dividend paying ETFs, and both these ETFs have a massive starting yield and pay dividends monthly, which is making my total monthly dividend amount move up at the fastest rate I've seen in a while. Now both these ETFs also have a rock solid strategy and are relatively safe, at least in my opinion. So if you want to see which high yield ETFs I've been buying like crazy, and 2 ETFs I not only think but know you need to look into ASAP, stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the 2 ETFs that I've been buying like crazy that are definitely helping my dividend income grow at a quicker rate than I've seen in the past is none other than 2 ETFs, both from NEOS, the NEOS NASDAQ 100 High Income ETF, we're talking about QQQI, and of course the NEOS S&P 500 High Income ETF, SPYI. Now, to be fully transparent, and of course you already know this if you've watched my videos for a while, I've been buying a ton of SPYI for a while now. SPYI is no stranger to my long-term portfolio, but this one over here, QQQI, is a newer position that I've just started to grab a few more shares of as of recently. Now, the reason I love both these ETFs is because they pretty much solve everything I'm looking for as of right now in my current journey for getting as much dividend income as possible, as fast as possible, for as cheap as possible, but still doing so in a safe manner. Now, don't worry, we're going to dig into exactly what I mean by that, but just to go over some of the basics, both SPYI and QQQI are both from NEOS, like we said. They both pay dividends monthly. The expense ratios are the exact same for both these ETFs, which is 0.68%. It's going to cost you a pretty penny to hold on to either one of these, but based on their performance, at least so far, I think it's worth it. Now, the difference between both of these high income ETFs, QQQI tracks the NASDAQ 100 and SPYI tracks the S&P 500. And looking into the target benefits of both of them, first off, for QQQI, number 1, the fund seeks to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and implementing a data-driven call option strategy. Number 2, actively managed by NEOS, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower tax rates. Now also, number 3, the fund utilizes a call option strategy that may at times both sell and buy NDX index options, which may provide for upside opportunity in rising equity markets, which is definitely what we've seen over the past few months. Now, we can go over the entire strategy of SPYI, but spoiler alert, it's the exact same thing more or less, but instead of investing in the NASDAQ, they use the S&P 500 over here. Now, just to compare both of these funds, some more fun data, SPYI has been around since late August last year, where QQQI has only been around since late January this year. Now, because that SPYI is much larger at 1.6 plus billion, where QQQI is just over 340 million, but still growing daily. Now, both of these funds, like we said, do pay a dividend monthly. The distribution rate so far for QQQI is 14.48%, and for SPYI is 12.08%. Either way, massive dividends that give investors the opportunity to generate a ton of cash flow for their portfolios, which is honestly exactly what I've been doing. Now, looking at the performance on the max time frame for both of these ETFs, QQQI has, of course, only been trading since early this year, and it's up around 5.45%. But again, with that trailing 14% dividend yield, this ETF has made investors quite a bit so far, and this is just since inception. Now, SPYI is up around 5.43% in the max time frame, but once again, with an 11 or 12% yield, I don't think anyone's complaining. Now, one thing I like about both of these ETFs and the strategy that both of them employ is the fact that sometimes they are going to be looking for upside capture by buying NDX call options or, of course, S&P call options. There is some room for upside. Now, I'm not trying to be greedy, of course. I'm going to be very happy with, say, 10 or 12% yield per year as far as dividends go, even if either one of these were just to trade sideways. But on top of that, who doesn't want to see a little bit of price appreciation along with it? Now, both of these funds cost more or less $50 as of right now, $52 per share, and QQQI has been paying around 60 cents plus on a monthly basis, more or less since inception, which has given investors, like I said, a ton of cash flow for just a $50 ETF. Now, SPYI is not much different. SPYI does have more of a track record and has paid investors like myself around 48, 49, or 50 cents ongoingly since inception of the ETF. Now, if we were to compare SPYI to QQQI, there's not all that much data to go off of because, again, both of these funds have only been trading for a short amount of time, but just in the last year so far, SPYI has returned a total return of around 9.72%. This is with dividends reinvested, of course, where QQQI has returned around 12.45% total return, or an annualized gain of around 21.7% or 27.89%. Either way, no matter how you want to cut it up, both these ETFs have done very well so far, especially for those investors like myself that are looking for some high quality assets, some high quality covered call style income generating funds that are going to pay investors a massive amount of cash flow from day one. Now, as far as other income generating ETFs that I actually own right now, there's things like JEPQ, of course. We have funds like JEPI, or even something along the lines of QYLD. There's lots of ETFs out there that all give investors hope for a massive starting yield compared to most other stocks and ETFs across the market. But honestly, out of all the more income-focused ETFs out there as of right now, SPYI, because of what it offers, and QQQI are really high up as far as ETFs that I've been buying as of recently. Now, all that to say that QQQI and SPYI are probably not the perfect ETFs for every single investor out there. They're probably better for an investor that's a little bit closer to wanting to use some of their dividend income for things like bills, or maybe to even potentially retire early. But because the funds are relatively tax efficient, even if an investor is a little bit younger, like myself, I think both SPYI or QQQI could be great funds to look into. But now lastly, most importantly, I want to hear from you guys down below. Do you currently own any shares of either SPYI or QQQI in your portfolio as of right now? And if so, how many shares do you have? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.